Welcome to The Explainer. Today we're setting up the absolute ultimate heavyweight clash in commercial aviation, Airbus versus Boeing. You know, these two aerospace titans have shaped exactly how the world travels for decades, and as we look at the landscape in 2026, the stakes have literally never been higher.
So that brings us to the big question of this explainer. Who truly rules the skies in 2026? To figure that out, we're stepping into the ring today as a strictly neutral referee. We're not taking any sides. Instead, we're just going to let the raw data, the production pipelines, and the financial scorecards crown the champion in this historic rivalry.
And to kick things off, we've got to look at this massive figure, 12,487. That is the cumulative number of A320 family deliveries that allowed Airbus to officially dethrone the Boeing 737 as history's most delivered jetliner back in late 2025. It's a milestone 4 decades in the making, and it perfectly sets the stage for our analysis today.
Here's the fight card for today. First, the 2026 aviation landscape. Then, the battle of the narrow-bodies, followed by the wide-body war. And finally, we'll break down the financials and the massive ripple effects this rivalry has on global jobs.
Section 1. The 2026 Aviation Landscape. Setting the stage for a manufacturing showdown.
Okay, let's dive into the current state of play in the global aerospace sector as we navigate 2026. Look, while passenger demand is absolutely surging worldwide right now, the overarching theme for 2026 is that both of these aerospace titans are battling severe bottlenecks. Airbus has this highly ambitious target of 870 commercial aircraft deliveries for 2026, which would actually surpass its pre-pandemic record. But they're being held back by a constrained supply chain. Specifically, Pratt & Whitney engine shortages for the A320neo family are really forcing Airbus to pump the brakes on their ramp-up trajectory. Over in Boeing's corner, well, they're facing their own supply chain constraints as they work tirelessly to stabilize and accelerate their production lines following past manufacturing crises. Both companies have the demand for sure. The real challenge is just building the supply.
Moving on to Section 2, Battle of the Narrow Bodies, the single-aisle clash.
Let's shift to the first weight class of our bout. This is the absolute workhorse division of global aviation, where the real delivery volume and cash flow lives. Taking a look at the data, Airbus currently commands roughly 60% of this single-aisle market with the A320neo family, while the Boeing 737 MAX holds about 40%. But hey, don't let that gap fool you. Boeing is executing an incredibly aggressive recovery strategy, accelerating their output to close this gap and reclaim that market share. The contrasting positions here are just staggering. Airbus is sitting on this dominant backlog of around 7,190 A320neo family aircraft, and they're targeting a production rate of 70 to 75 jets per month by the end of 2027. Over in Boeing's corner, they've got a healthy backlog of roughly 4,887 MAX jets, and their primary focus right now is successfully ramping up production to 52 aircraft per month by the end of 2026.
So, you might be wondering, why does Airbus hold that 60% share? Well, it largely comes down to slight technical edges. Both aircraft are honestly incredible feats of engineering, prioritizing major fuel savings over their predecessors. But the A320neo boasts a 2 to 4% absolute fuel burn advantage over the MAX in most mission profiles. It's also about 5 decibels quieter, which is a big deal for noise-restricted airports. And from a passenger perspective, the A320 cabin allows for a wider 18-inch standard seat, compared to the 17.2-inch standard on the 737. And let's be real, if you've ever fought for elbow room in economy, you know those 0.8 inches definitely matter.
Section 3, the wide-body war. Flagship twins of the future.
Let's move up to the heavyweight division to compare Airbus's proven reliability against Boeing's massive technological leap. Now, what's really interesting about this is the completely distinct design philosophy each company took. The Airbus A350-1000 boasts an incredible 8,700 nautical mile range, giving it a 1,415 nautical mile advantage over the Boeing. But Boeing counters with sheer size. The 777-9 carries 426 passengers, that's 60 more than the typical Airbus layout, and its new engines are literally wider than the fuselage of a 737. It's crazy. That's exactly why it needs those revolutionary folding wingtips just to physically fit into standard airport gates.
And this brilliantly illustrates the flip side, the pushing the envelope. Boeing's technological leap has turned into a massive certification headache. Originally targeted to enter service back in 2020, the program has faced intense FAA scrutiny, structural issues, and additional required flight testing. With certification now expected in mid-2026, it's a 6 to 7 year delay that has cost Boeing over $13 billion in overruns.
And man, the airlines waiting for these planes are really feeling the squeeze. Emirates is the largest customer for the 776, holding 270 orders. Their president, Tim Clark, expressed clear frustration, noting that they need these aircraft yesterday. These delays force major airlines to extend the lifespans of older, much less efficient planes. This inflates maintenance costs by millions of dollars annually and completely disrupts the launch of highly anticipated luxury cabin products.
While Boeing navigates certification, Airbus is fully capitalizing on operational maturity. The A350-1000 has been in service for 8 years now, boasting a stellar 99.5% dispatch reliability. Because it has that proven ultra-long-haul capability, Qantas actually selected it for Project Sunrise, those grueling 20-plus hour non-stop flights from Australia to London and New York. Perhaps most importantly for airlines right now, Airbus can offer predictable 18 to 24 months delivery slots today, completely bypassing the uncertainty of pending certification.
Finally, Section 4, Financials and Ripple Effects, the industry scorecard.
Let's zoom out a bit and use alpha spread financial data to see exactly how this hardware battle translates directly to the corporate balance sheet. Looking impartially at the numbers, both stocks are currently considered overvalued compared to their intrinsic value. Boeing by 25% and Airbus by 6%. However, when we look at operational health, Airbus is showing a much healthier hand right now. They've got a positive return on invested capital of 4.5% compared to Boeing's negative 3.8%, and Airbus is generating a healthy $4.7 billion in free cash flow. Meanwhile, Boeing is operating at a negative $1.1 billion as they work through their production recovery.
So the crucial point here is the net margin. Airbus is operating with a 7.1% net margin against Boeing's 2.1%. This profitability edge gives Airbus significant capital flexibility to invest in their supply chain and future aircraft development, while Boeing really has to focus their capital on stabilizing existing lines and pushing that 777X over the finish line.
Now, you might be asking yourself, why does this corporate duel matter outside of Wall Street? Well, because this manufacturing output translates directly into real-world employment. The planes rolling off the assembly lines in Seattle and Toulouse are the absolute engine of the global aviation job market.
Let's see how this builds because it creates an incredible downstream ripple effect. Every single time a new narrow-body aircraft enters service, it requires roughly 10 to 12 type-rated pilots to crew it across a full roster cycle. So if Airbus hits that target of 870 deliveries this year, that alone creates a massive surge in demand, equating to 8,700 or more new pilot jobs globally. And remember, that's just Airbus. When you add Boeing's accelerating production into the mix, the human capital required to keep these new fleets flying is just staggering.
As we wrap up today, we're left looking at a truly fascinating horizon. Airbus clearly holds the current delivery and efficiency advantages in 2026. But make no mistake, Boeing is a sleeping giant, rapidly building production momentum. With Boeing's long-term production recovery and the eventual highly anticipated launch of the 777X heavyweight, how will this historic duopoly be reshaped by 2030? It's a high-stakes rivalry that will undoubtedly define the future skies, and we'll be right here to track the data every step of the way. Thanks for joining me.